Good morning, everybody. Hey, welcome to Thursday. It's February 2nd. Yes, we got a few earnings reports coming out today. We'll talk about Facebook and more when Dave joins us here in just a few moments. Before we do that, though, let's not forget that in the world we live, there are so many things that you and I cannot control, but you can control how much risk you have in your portfolio. You need to know what risk you have and how close it really matches up with where you should be. Give us a call, 863-382-0037 to schedule your core retirement design. That we've got Dave coming up next.
Something happened yesterday that kind of you normally would expect to be poison to the markets. Another interest rate increase, but the markets were happy. Actually, they got quite happy at the end of the day. Let's check in and see what's going on with your money on the marketplace this morning. Phillip Statler is here from Statler Financial Services in downtown Sebring. Good morning, Phillip. How are you?
Hey, good morning, Dave. Hey, doing okay this morning. Yesterday, not a bad day on Wall Street. You got to like the NASDAQ really getting a nice little bounce, and it looks like we might follow through today as well.
That would be kind of nice. 0 to 0 from opening to close. You could almost call the blue chip indexes boring. The Dow was up by 7. Standard & Poor's was up by 43. Like you said, NASDAQ had kind of a party. It was up 232 points, up a full 2%. But the tail of the tape was in the middle. We were giggling on the phone a little bit about what happened in the intraday. About 2 p.m. when the Federal Reserve announced a quarter-point increase in the reference interest rate, the markets kind of responded with kind of a little 100-point dip in the Dow, which was, okay, fine. That was doing what they expected them to do. And then Paulson took the stage and used a word that I never thought in today's economic climate we'd ever hear the Federal Reserve Chairman do. He said he sees disinflation happening. He actually sees prices going backward. And everybody went, holy crud. And the market took off like a skyrocket. You'd almost think he'd said, we're done with this junk. We're going to start reducing interest rates again, wouldn't you?
You would think, but that's not what he said, is it?
Not a bit. Basically, the statement from the Federal Reserve itself, the official statement said, we're not done yet. More interest rate increases are coming, to which the market said, okay, down a little. But Paulson was, basically reinforced the fact that he feels that these interest rate increases are having an effect, and it's true. I mean, our inflation rate is down to like 6.5%, and we haven't really creamed the employment market. One of the reports out, too, from yesterday afternoon, we got 11 million job openings out there, and based on the government data dump this morning, only 183,000 first-time unemployment claims, which is, I think, the lowest since like 2007 or something.
Yeah, and it's funny you're talking about, our Fed president, and there's a quote in here of this article that says the more he talked, the more dovish he was.
Yeah. he really did sound that way, given the fact that the last few press conferences he had, I've paraphrased as saying the beatings will continue till morale improves. He kind of changed his tune. You and I have been talking about the makeup of the Federal Reserve Open Market Committee. It sounds to me like he's reflecting a new makeup of the committee, doesn't it?
It really does, and I think that we may see that deflation hit the EV market first. I'm seeing several articles reflecting how Ford is dropping the price on their Mach-E and then we know Tesla's dropping the price on some of their EVs. So I think that may be one of the first places we see some deflation.
And some of the consumables are actually down, too. I had a news item that I was playing with about 25 minutes ago that the Super Bowl buffet people might want to buy, things like shrimp, things like the beanie weenies and the chips and stuff, they're all down from last year at this time. Beer's up by 11%, but the rest of those food items have actually backed off a little bit from last year at this time. So there is some good news out there.
Yeah, there is. And so I think we kind of forget about it when we go to the grocery store because we still can't walk out for less than $100. But, it is coming down somewhat in certain areas. And that is good news.
Oh, absolutely. Now, if they'll just drop the price of cat food, my grocery bill might go under $100. I'm not sure that's going to happen anytime soon. Reference the employment picture today. We did get some data dump stuff out of the government. Non-farm productivity in the quarter, they expected 2.4% increase. It was up by 3%. Initial jobless claims only 183,000. That's darn close to record levels. And continuing claims backed off as well. Only 1.66 million continuing claims. Now let's hold that up against the 11 million job openings, and I think it'd be kind of hard to say anything but the employment market is still pretty hot, isn't it?
Yeah, it really is. And to think that job openings actually increased from 10.4 million to 11 million, man, that's just not good news from the employment front.
Absolutely. I mean, okay, it's fine when employment rates are able to bid up what the effective minimum wage is. That's the way minimum wage laws, at least to this economist, says they should work. But at some point in time, you need to hit a plateau in order to let everything equalize out. And right now, they just keep going up because we got so many more jobs chasing too few employees out there. I don't really see inflation getting much below that 6.5% they've been talking about, as long as we can until we can level out the employment market a little bit.
Well, yeah, and I think that goes back to what Al Arian said a week or so ago about, we're seeing the cost of consumer goods dropping some, that inflation reducing, but the service sector, we're not seeing that because it's so labor intense by definition that the job cost is still going up, and so that still continues to be a labor intense, which is still got pressure on it and going up.
Absolutely, and when you shared that interview with Alarian the other day, I mentioned, we're building in statutorily increases as well, because with the minimum wage phasing upward in so many states, now California is talking about a $22 minimum wage. Reference to a minimum wage is what brings wages up. Yeah, they're paying above that minimum wage now, but it's a reference to the minimum wage, and when we statutorily raise it, we're kind of building in by law more labor-related inflation, which from the standpoint of the workers is good news, but from the standpoint of prices, we're just kind of guaranteeing ourselves some inflation for the out years to come, for probably a couple, 3 more years.
Yeah, it's it's just, it's, I don't know. It is what it is, but we have to continue to move. I just saw a blip come across my wire. It said that the groundhog saw his shadow. That's not typically good for stocks.
Oh.
Didn't know there was a correlation, but I guess there is.
No, I didn't either. I've ever since I watched the video, so I had it on about 7:15 when they actually pulled the rat out of his hole, and I said that means 6 more weeks of tourist season down here. And there's 2 sides of every coin. Hey, a bunch of earnings coming out today, and that probably is going to help the market, especially based on what you tell me Facebook did. Meta did a kick-butt job this quarter, didn't they?
Yeah, they really did, man. I'm telling you, they had a great quarter. They just knocked it out of the park. They came in at something like $2. I'm sorry, they came in at $3. They expected to make $2.12. They beat on revenue. They've been cutting costs, and it seems like they're doing a daggum good job at it as well. And they're buying back. Now, this is probably helping some too. They put out, they're going to buy back $40 billion of stock. And I don't know what time period that is, but that's a lot of stock to be buying back. And so they are up 19.6% this morning.
Criminy. You don't normally a 20% change in a stock price is a decrease because of some really bad news. They don't go up that much in one day very often, do they?
No, they really don't. So some good stuff there. Now after the market closes today, I think we got Google, we've got Apple, we've got I think Microsoft. So we got a lot of those other companies report after the market. Ford reports after the market closes today. So some big names we'll be talking about tomorrow morning.
It's going to be interesting to see what happens with them, because if Meta's cost control efforts have done that much good for them, the rest of the high-tech firms are going to be kind of expected to follow suit, or they're going to pay big time if they just make the numbers they promised.
Well, that's right. And so that's going to be interesting. We'll be looking this afternoon to see how things come in.
Absolutely. Anything else coming out this morning that qualifies as a household name, or is it kind of quiet with all the?
No, we've got a couple. We do have a couple. We've got Merck, the pharmaceutical company, and they beat on estimates, both top and bottom line, for last quarter. However, when you start looking ahead, their projections are below what the expectations were, and they expect their earnings to decline in 2023. And so they're trading down about 1.3%. That we have Honeywell reported, and Honeywell, they fourth quarter was short of expectations, so they missed on revenue, and so that wasn't good for them. They're trading down 3% this morning. We did have a few.
They're a big defense contractor. They're one of the stocks that would have expected to do well.
Yeah, you would think, but they so they're down. I've got two more for you. I got Elf Beauty Supplies, a company, and they did well. They beat on estimates across the board. They're talking about per share. They did well there as well. They raised their full year outlook. They're almost as good as Meta today. They're at 14.6%.
Wow, irrational exuberance.
Yeah, big things there. So that's really the household names I have for you. Now tomorrow morning we'll have a slew with a lot of those tech companies reporting in the morning or this afternoon.
Absolutely. And like I said, with the bar being raised by Meta, it's going to be interesting seeing how investors respond to a normal report. Resetting the table marginally up on the blue chips yesterday after the interest rate change from the Fed. NASDAQ, well, they're more debt sensitive, so it makes sense. They had a party. They were up a full 2%. 45 minutes before we start trading this morning, Phillip, what are we looking at today on the indexes?
It was mixed a little bit ago, but we've got the Dow finally in green territory, barely. About 0.01%, but still it's green right now. We got the S&P 500 up a little over 0.8%, and the NASDAQ 100 is going boom gangbusters again this morning, up 1.8%. So across the board, we're seeing green ink. On the other side of the table, we've got silver made a huge jump this morning, Dave, up 3.5%, back up over, that's like 84 cents an ounce, back to $24.45 an ounce. I was reading an article the other day that they expect over the next couple of years that silver is going to be in high demand and short supply. So expecting some price increases there. Gold's up 1% to $1,961 an ounce, and crude oil, it's come back a little bit. It was below 75. But it's bounced back up to $76.11. That's down about 0.5%.
And I got zero idea why the oil is dipping, because the employment market is hot, and it does actually look like we might be looking at a soft landing the way things are going on the employment market. So I'm not really understanding why it's going down. Overseas Asian Rim markets were up fractionally at the close at 6 a.m. this morning. European markets evidently like the fact that their central bank put in another 0.5% rate increase, because they're all up as well. German markets are up by over 1.5% halfway through their day. Having a plan for how you're planning on retiring goes a long way. Making sure that plan works counts for a lot, too. How can you help me make sure my plan works, Phillip?
Dave, that's exactly why I designed the Core Retirement Design, to help people really and truly put together the retirement they always dreamed of. Give us a call at 382-0037 to schedule your Core Retirement Design, where we'll help you design that retirement that you always dreamed of. And then join us this weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk 730 and 95.3 FM.
And back tomorrow morning with one of those drum roll moments with the official unemployment rate and a whole bunch of household names reporting their quarterly earnings. It ought to be an interesting show tomorrow morning right here, right?
It will. I think we got some good news. We may see some nice green pops in the morning.
Got you covered. You have a good day, and we'll see you then, all right?
All right, man. Take care.
Take care. It's 105.7 Light FM and Statler Financial Services, Phillip Statler.
This is your captain speaking. We're expecting fair skies and smooth.
Everybody, I want to thank you for joining us today. Hey, remember that tomorrow's a big day. I hope you'll tune in then, and hope your day goes well. See you then. Take care. Bye now.